Welcome back everyone. On today's video we're going to be talking about an ETF that I'm very interested in investing in. We're going to discuss why, and that is ticker symbol XEH. It's a Canadian hedged iShares MSCI European IMI Index ETF, and it has a broad exposure to the European markets, which I currently have around none of. The global economy is comprised of approximately 50% American stocks, and Canada represents around 2% of the global economy. Now, my portfolio is currently invested in 50% Canadian stocks and 50% American stocks. So I have a lot of home court bias, which a lot of you other Canadian investors have also. I'm trying to limit that because I think 50% is too much, because I also own a house in this country, Canada. So if you add up all the money I have in my house with all the money I have in my portfolio, I'm really tied to the Canadian economy. Now, I realize that this ETF here is Canadian dollar hedged. I do think that makes things a little bit easier, but the securities that it's tied to are all European based. So I think this is a good way to get broad exposure. And in case you guys were wondering, Europe represents around 11% of the global economy, so a lot more than Canada, but nowhere near the US. Before we get into the nitty-gritty of the fund, I just want to take a look at the total returns here so you guys have some idea of how it's done in the past and how it's doing currently. So we can see a mixed bag of results. 2018, it finished minus 10% for the entire year. 2019 up 26%, which is great, followed by minus 3%, plus 24%, and minus 8%. So there's not a lot of middle ground here, guys. We're having big swings in one direction or the other. It's something to keep in mind. Year to date, this ETF is currently up a whopping 10%, which is underperforming the S&P currently, but it's still doing really well. And yeah, it's just a great way to diversify your portfolio, in my opinion. If you had held this fund in the last 12 months, a trailing yield would have been 3.25%. Now, with ETFs, there's usually a good bit of turnover, so the current yield and the trailing 12-month yield might be a little bit different. So this is kind of my problem with this type of ETF, because I'm at heart a dividend growth investor, and I like things going up and up and up and up and piggybacking off the previous year. And when you invest in these ETFs, you don't usually get that type of continuous growth of your dividend going up, because there's a high turnover. So the management might sell some higher dividend yield companies and buy some lower ones. So I do have a bit of an issue of that. That's why we're looking into this today, because I find this ETF very interesting. I'm not saying I'm going to buy it yet, but it's definitely on my watch list. And when we take a look at the top holdings here, I mean, I'm going to be familiar with some of them, such as Nestle and ASML. ASML is an equity that I'm considering purchasing in my tax-free account on its own. I think it's an amazing company. I'm just kind of waiting for a more favorable valuation currently. MVMH, pretty popular one now. So the whole point of this is, I am familiar with some of the top holdings, but as we go further and further down the list, I really am not. And that's the point of having a fund manager who's familiar with the European index, picking great stocks for me, because I honestly don't know like almost any of these on the second page here. I mean, Mercedes-Benz obviously, but most of these, nothing, guys. I have absolutely zero. Bayer maybe, so like 1 out of every 10 I've heard of. Like I said, once again, that's the point of having someone else looking after this investment in this ETF. It'll give me that exposure that I just not educated in. I don't want to take a big guess on European holdings, so I'm going to let the professionals at BlackRock do it for me. If we take a look at the different countries that it's invested in, we can see it's pretty well diversified, with the United Kingdom being the top of this, which is fairly understandable. But it's pretty well diversified over European powerhouses. And if we take a look at the sector breakdown, nothing is over 20%, which I like, and the top 5 are under 20 and over 10%. I think that's pretty fair, pretty safe. This seems like a medium risk fund that I wouldn't put too much money in, but just for a little bit of diversification. If any of you guys out there know a better European fund, or think it's not worth it to get the Canadian hedged version, if you have it, let me know what account you guys are holding it in for tax purposes. This is just something that's on my mind right now. I'm throwing it out there to the community. If you guys have any opinions on it, let me know. It's one that I'm considering, and it's going to be on my watch list for now. Alright guys, thanks for watching, and we'll see you in the next video.